Hi, welcome again, I guess. It's nice to be here again, and I'm just here to talk about our positions as of October 26 at 11:33 p.m. So, what we're looking for, what we have actually. I'm not really sure where do I stopped last time about the positions that I had on. I'm still on the same three scenarios here. I'm on the euro against the AUD, I'm in the euro against the pound, and also I'm gold as well. Which two of them are now running not in profit anymore. This is the gold area, and the gold area I think we opened somewhere around here, but I closed it on 0-0. I closed on break even. That's the correct term. And I open it in a possible future position, which I think was better. The price was higher than it was, so I got these two little flags over here that show me high potential for the upside. And then when it comes to the downside, again we had a massive short coming, and that's the trigger for me. At least I like to keep things very easy, and when you go to shorter time frame, you can actually see the market making some more violent moves with that period of time. That being said, that's why I closed on break even, and I'm still waiting for the gold to go down. I'm in position on the open side. As you can see, the price opened at 1978 point something, 51 and 51.8, something like that. And we are still expecting the gold to be bearish in the near time future, probably 1 month from now, 2 months from now. I'm using now all the different scenarios, and I actually took not advantage, but what's the word I'm looking for here? I took this little area so I could explain better what hedging would sort of look like in my head. I think that's really important, because I was checking the previous videos, and I was like, that's a bit confused for someone who's probably learning right now or doesn't even understand what everything is. So I took this took that lesson, and then I passed through the chart. As you can see, I don't have a I don't have a stop loss. My stop loss is the hedging position. So if something goes wrong, I not close, but my short will be trapped within this loss over here, with this loss of 1.92. That's on a gold. Gold moves extremely high with, if you can see, when one day it can move this much. So that's about 3.37%. So you need a little bit of a wiggling room, and to do that wiggling room and to keep your balance, you actually use the account lotting calculations, which I've shown on previous videos. The website, you can check it out later if you want. And then this is what it sort of look like in my head. I don't have a stop loss. I just put hedging position, and the hopes that if the market doesn't go on my way, I open a head position, wait for the next level, which are trigger zones, which are called trigger zones, and I wait for the next trigger zone, and then I'll wait for a price to push a little bit down, so I make a little bit of profit on top. So I'm trying to make as much profit as I can with the levels that I have based on this. So if for me to close this trade at a break even, I would have to close this one in profit in here. So that is about, let me just put this back. It's not necessary. I can just do this. 1.79% against 1.88%. So 1.79, 88, it's about 0.9%, 0.10%. Yeah, 0.9%. And for that one, I will be waiting for the markets to, if it goes up, that's okay, that's good, we can take a little bit of profit here. And if it goes down back, we are looking to sell at 9% less. So we're looking to sell at 798 to be on a P&L situation, a net position, to be on break even. That's what we're looking here. That's really the issue. I cannot close on this area, so market is now moving on this area. Let it do this thing. Yeah, I cannot change the way it does. I already have the risk, and I already have the same lot size on both ways. So if I win something here, that's also good. If the market shorts a little bit down, I also can close this trade, this one, which would be in loss if this one were to open, and then I'll just close it on a net position on break even. So that's clear. Now on the EURGBP, I didn't put that same. I just put a stop loss where I think I usually just use a stop loss where to check where I'm gonna open my next position just in case. It's not the case here because we're running on profit, so that's really good. It scared me a little bit. Actually, not scared is not really the word I was looking for. Would be more like, yeah, sure, it went that way. What happens in the market, I cannot control it. So, and then we have the situation on euro against the Aussie, which was extremely well for our position. We opened the hedging here. I think that one is the same as the other one. We actually closed we didn't manage to get on the hedging position over here, so that was also really good. And then we did manage to go down. So what I'm looking for is actually something to tell me not to move more on this, and I'm pretty happy with the setup I have, because if I win here, I make 1.04% against the loss, which should be around 1.17%, which is not very much. If I lose it, I just lose it a little bit. I don't lose a lot. And in the market, I'm just the hedging is just a way for me to see, like, all right, we are wrong, let's get another try. That's it. But it's something that it was the only thing that actually got me a way of being scared of stop loss, and I saw how fertile, I think that's that's the word probably. I think how stupid it is. Not stupid, it's really good to put a stop loss where you think that if the price moved that way, all right, it's nothing here, nothing we can gain. That's really good, so you can manage your position and your account. That's really good. But I prefer hedging because it gives me another opportunity, since the market always do stuff like movement, price movement all the time, move up, move down, move up, move down. So eventually it will come back again or not. It doesn't matter really, because I'll have another opportunity here. So the market, we open, and currently I actually publish stories on Instagram about how much the market moved down, and then it goes all the way up, and it moves all the way up here, almost opening another position for the hedging, which I think it's really important to see. Many traders would probably just consider, okay, doesn't matter for me, the market I want to move too far, and I'm not gonna keep this position very much. So you have really to trust what you are doing. So you have really to trust your process and not let some thoughts make out of it. So that's why when I do position in a market, sometimes I really completely forget about it when I'm just checking it. I'll just go there and then see, okay, what I'm doing here, what my thought process, and then I'll wait for it. And then if I see something that, okay, it's really game changing, then probably I would considering making something out of this. But for now, no, it's the same position, it's the same thing. The market's gonna do this. It's gonna do its thing. It doesn't matter either way it goes. I'm still gonna make probably will be able to make profit out of it. So it's completely fine. It doesn't matter. We are running. Still on the trigger zone on the gold, so that's okay. The euro against the AUD, which is the only concern, is that it moved up from the trigger zone. It tried to break it, but it didn't. It happens, for instance, it happens all the time. It tried to break it, but it didn't. Eventually, it did come back. At the same time, I can say the same thing over probably here as well. Look, try to break it. If I would put a position based on the last time, I would put it somewhere, the chart somewhere around here. It tried to break it, it couldn't, start to move up. That's the only thing. And it doesn't matter because we're hedging anyway, so either of outcomes, it's good for us. I've been recently looking more for the oil as well, trying to figure out some of the stuff for the oil, and I have some good setups ready, which I have some just good thoughts about it. Don't have a really good setup. I'm really considering bullishing, actually buying or bullish, yeah, that's also correct, the market for the crude oil, or the oil, is whatever you would like to call it, because we recently have been very down. We have a little bit of change of character here, and we're looking back and seeing that either of these two zones can be our entry for a possible future market. I still have to gather the data for the flux on the oil. Didn't have quite the time to do that. I was busy with some other things, personal life, and well, I'll be checking that very soon later, and probably on the next video I'll have something on it. Well, anyway, it was good to see you guys again. Good to talk about this stuff because it's really important for me, and probably for some traders as well, which are probably struggling, like, my positions are wrong, I don't know what to do. Just chill out, do your thing, do what you know, and which is just get your studies together and then make something out of it and try to respect it. Learn as much as you can. Don't let stupid thoughts go over your head and make you do unreasonable choices. And do unreasonable choices on the market is the only thing that will eat up your account, that will eat up, and you eventually will get a maximum stop out, which is losing your account completely. And I don't think that's cool. Nobody thinks that's cool. That's why I'm trying to give you a little bit of sense of what risks are. It's not something that you be afraid of. Risk is something to be taken. If you are in the market, you will be taking every day, and that's not something that you should consider your enemy. It's just something that you should consider as you study. So if something went wrong with your trade, do not make this out of, wow, oh my god, I'm so stupid, or oh my god, I'm so dumb, I couldn't make it better. It would be clear for me that this market would go up and I would make a lot of money because the market moved up all the way through here, and I'm like, no, that's not the thing you need to. That's not the thoughts, the process of thoughts you need to have. The process of thought is, how can I make it better? If I'm losing, how can I make it better? If I'm winning, how can I not screw up and try to make as much profit as I can? Well, if you put on a little sheet of paper and write it down, some very specific rules that you need to follow on the market, you will have an advantage on pretty much most of the traders I've known in my years, because they think, oh, indicators are everything and stuff like that. I do use indicators from time to time, but it's not to make to base my decisions on. I don't open trades based on indicators just because the RSI, it took over the 80%, the 80 line, and I'm gonna push the market bearish. No, I'm not gonna do that because of this. Because we have seen loads of time when the market actually didn't do that and the indicator were completely wrong. And you can actually check it out, some of the strategy used by indicators. So if you want a guy, I'm telling this because of a friend of mine actually recently called me up and said, man, he's a very stubborn guy, he doesn't like to be proven wrong, he doesn't like to be he's like to be the one, and he knows everything. So I told him, why don't you go to the TradingView strategies, and then you find here that you have some strategies, financial, I think, sorry, no, you go here, technicals, yeah, you go to strategies, and you can find all the strategies based on all single indicators. I mean, some of them actually. You have super strength strategy, you have RSI strategy, and you're gonna see for yourself that strategy, they probably have, oh sorry, this is my free version. The strategy have like almost none of the real. Let me check again. Let's see here. For instance, let's go to the Most people really like the super strength strategy. So you go there and go look at the percentable of profits on this strategy. You're gonna see 37.69%. So you're actually losing money if you do this strategy, which is pretty bad. So you have a maximum drawdown as well. Look at this. Total closed trades. So you have 520 trades based on this strategy, and you have 2.7% of net profit against 12.5% of maximum drawdown. So yeah, that's a number you should consider, as well as I have here the EMAs as well. I like them. I like EMAs. They're really nice. For instance, let's see the MACD strategy, and you go, oh, still on the strategy here. Let me take a look on that, shall we? Indicators, strategy. I don't want. Well, basically, you can come here and you can check for yourself. I don't like to check it because I already have my edge, so it doesn't matter for me. I don't use indicators. I just wait for me to put you on the real world, which is there are no indicators gonna tell you the direction of the market for the next week. There are no channels that's gonna give you, oh, if a channel goes here, then bling bling bling, then blah blah blah, then blue blue blue. No, it's not gonna go like that, because the market's not run by computers. If it were run by computers, you could be profitable just by simply trading with coding program. So yeah, it doesn't work. But it can certainly help you. It can certainly help you have an overall view of the market. So if you're going to choose to use indicators on your trade, I urgently advise you to go through what your indicator does and then put that in the context of the market. It's just simple tool to help you out on your trade. It's not something to give you entry and exit thoughts. So don't think like that. That's completely foolish, and if the people are doing that with you, then you're probably in the wrong place. So yeah, I think that's it for now. I've just put it all out, right? That was a bit rough. Anyway, it was nice to see you guys again, and as you can see, we are running 2 positions on non-profit. So I'm just completely being here transparent. That's the point of the channel as well as remind myself of what the stuff I've been thinking. And we are running 1 position on profit, and the other 2 is running on non-profit right now. So we're gonna take a look at that later today, because it's almost Friday. It's midnight almost, so it's almost Friday, and we're gonna look back on Friday and check it out how market's gonna close. If you're gonna close with our positions on losing side or the winning side, it can happen both ways. To me, I don't really mind, because I'm into this stuff so much that I just don't care anymore, really. I just follow my instructions. My instructions give me everything that I need, and I have multiple opportunities of being wrong all the time, and I can still and you can still be profitable. So just check it out, hedging. Try it out in some chart that you can use, and try hedging. Try to see what hedging can do for your life. It's really changing it's gonna give you lots of opportunity, and try to understand a little bit of the market through other perspectives as well. Well, with that being said, thank you very much for watching, and see you tomorrow, I guess. I'm not sure if I'm gonna make videos on Friday, because, well, it doesn't really take time, because I simply record it and publish. But I don't know, might be. If I see something interesting in the market, probably the oil. Yeah, I'm gonna make a video on oil. I'm actually gonna study right now and check it out later, which is really good. Well, I'll see you next time then.